Joining us now, our global business editor Udayan Mukherjee for his take on all to track when it comes to markets this week and the cues that are top of mind. Udayan, what's it looking like this week?
Well, markets are consolidating, Abha. I mean, that's very clear for the last few days. It's not going up too much and it's not going down too much either. I mean, you saw last week towards the end, we did make a dart towards the below 16,000 level on the Nifty once again. But it did not hold there. Again, there was buying at that level and the markets bounced back, conveying the impression that it's not quite done yet, maybe with the pullback that started around 15,200. So we went up to around 16,200 kind of levels, had a 300-point kind of a pullback, and now we've come back to those kind of levels again. So I think the best word to describe this is consolidation. It's a kind of a trendless market at this point in time. As we discussed last time, it appears that the market might have exhausted the weakness for the moment, because it was a one-way kind of a fall on that way, all that way down to that 15,000 level, and having come back from there, I think the market's just about treading water. There is some sense of hope once again in the market, and there has been some buying at lower levels as well, and now I guess we'll just wait through the earnings season and see how it goes. I mean, the first couple of earnings have not been great, but they've not been disastrous either. I mean, from the big names like TCS or HDFC Bank, they've been par for the course with minor downgrades kicking in, particularly for TCS. So we'll see as the earnings season progresses further whether there is room for the market to go back to below 16,000 levels, or it's possible that we can hang around here for a few weeks and then wait for the global cues to determine whether there is more downside from here. But for now, I don't think there is anything special which has happened over the last few days to warrant a kind of a trend call for this market. I think we're just about consolidating.
Sure. Then what did you make of the numbers coming in from China, and do you feel that, I mean, we haven't seen too much of a reaction, of course, but in terms of the macro factors, the backdrop, the fact that, we're still wondering whether or not those growth concerns are going to loom large, ever spiraling inflation, is there a number to note?
Well, the China numbers are bad, but
yeah.
I think almost everybody agrees that the actual numbers are far worse than what they are conveying. So who knows, China could be at zero growth right now, or even in recession, for all you know. And that, of course, adds to the kind of headwinds that we're seeing in global markets or global economies, because if China is not going to fire and the Eurozone looks pretty weak already, and the US, while not in recession, is also in shaky ground, then what is going to propel any kind of global economic growth? So the macro is weak. But this is not new news for the stock market. The stock market knows that the focus has shifted from inflation worries to growth worries. I think it's been a few weeks now that the market started fretting more about growth and what the measures taken by central banks to address the inflation problem will mean for growth. So I don't think this is new news to the market in that sense, which is why, as you said, the reaction has not been intense. I think the key thing on global macro to watch as we get deeper into the year is if there are any kind of nasty surprises. Some part of the bad news is already baked into the price. Now, on the margin, if there are ugly surprises like the inevitability of a recession and things like that, then I think the markets might have another leg down. But for the moment, I think the macro bad news is known to the market, and therefore, to a certain extent, you would have to say it's been priced in.
If you like the video, do like, comment, share and subscribe.